Hey guys, it's Max Convexity. How is everybody doing today? Let's check out the market, see what's going on. Oh, hello, Jackson. Jackson just woke up. He's looking at me like, who in the to? All right, well, let's see what's going on. Let's check the Ultiverse. Or I guess we'll start with the ULTY grid. New trades are usually at the bottom, and the latest trades are Roku and United Healthcare. Okay, now let's go over to the chart, the ULTY grid. Boy, this NVO is killing us. It's one of these weight loss plays, and it is getting murdered today. We're going to look at we'll look at the option strategy and see how much money it's saving us today. See where the caller is, because undoubtedly the caller is saving us a lot of money. I always say that callers don't make this fund where it can't lose money. It just makes it where it can't lose more than 7 or 10%. So if this caller, let's say this caller was 7 or 10% away, right now the stock's down 19. Of course, you know, the fund's only going to be down 7 or 10, whatever, however far the caller was placed. Other than that, the market's kind of turning around. MicroStrategies is up. You can see it's DJT pulling back. In NOVO, I can't ever pronounce that. Let's see. Earnings Hub. Today, but I saw them talking about it on CNBC. But the weight loss play, Eli Lilly and this NVO. Anyway, unfortunately, Jay, it looks like, was on the wrong side of NVO. Nike also announced yesterday. I don't believe Nike had great earnings. All right, we don't have any Nike stock in ULTY right now. I think he's had it before. See who announces earnings next week. No earnings next week. Let's see if there's any the week after that. A few. Nothing that really looks notable to me, though. All right, well. All right, so ULTY, I mean, other than NVO is doing all right. Index buffer report. So it looks like this SPX has turned around and started going up, and out of all the SPX-based funds, SVOL is doing the best. Great job, SVOL. Great job, SVOL. JEPI also looks good. YMAX also always looks good. IWMY outperforming the parent. IWMI outperforming the parent. RYLD outperforming the parent. They're all outperforming the parent. IVVW outperforming the parent. CLIP outperforming the parent. Maxi, of course, always. Riser's down today, but it's you know, it's a good one. It's usually up. It's up most days. Other stocks are down, so it's all right to be down when other stocks are starting to go up. So let's see. I've been telling you guys on we've been monitoring this we've been monitoring this open gap. This happened after the election. The market jumped on SPY from like 575 to 584. And those prices, a lot of those prices still haven't traded yet. So a few days after that, last Friday, the market dropped into this gap, and then buyers showed up. So far this morning, again, same thing. It dropped into the gap. Buyers have shown up. The gap is supportive right now. If this gap were to give, if we're to get on the other side of this gap, we would probably start looking for the market to maybe start testing these lower levels around 540 or even 510. Okay, so now let's look at the buffer report. Single stock buffer report. MSTY killing it. That is great to see. I don't have that in the portfolio, the model or the family portfolio right now, but I do have it through the Dorsey Wright products, which I bought on day one. So let's see what else is doing well. AMDY, which is in the family portfolio, as is Coney, and they're both outperforming the parents. As is NVDY, not outperforming the parent, but I mean, today's the last day of the week. It's also called triple witching. It's the last triple witching, which is an option expiration, and it's when options on futures, stocks, and indexes all expire. It also has to do with the quarterly expiration. The quarterly expiration is 4 times a year on the third Friday, and when all those other things expire, and you have a quarterly expiration, there's a lot of volume and volatility around closing the positions and getting new ones. Anyway, a lot of that's probably already happened this morning. Some of the volatility happened on the big down open, but I wouldn't be surprised. Let's keep an eye on the market. You always have to look for it to rally back up here to the middle Bollinger Band or even to the bottom Bollinger Band and then peter out. And then maybe the bears will take another run at this gap and try to get enough momentum to shoot through. The bears just look at this like a football game, or that's why I look at it. It look like a war. It's just territory. Right now, the bulls or the good guys control this territory. All right. The bad guys run into it, then the bulls chase them out of it. So we'll see. But what I was going to say is there could be some volatility on the close today. But I wouldn't be. But sometimes, especially when the market's been down, you get a huge melt up into the close on triple witching. I mean, but also we could get a meltdown into the close on triple witching. Anyway, triple witching, expect extra volatility. Expect the unexpected. All right, so what else do we have to check out? Let's check out, I put the option. Okay, so did anyone see my video with Will Rind from Granite Shares? He was telling me about an option trade he did, and I was trying to argue with him and tell him he wasn't going to get any upside, but he just doesn't know. We're obsessed with upside at this channel. But what I was talking about, and I wasn't trying to tell him he wasn't going to make any money or wasn't going to generate any alpha, alpha, which is returns in excess of what you could get passively in the market. No, it's going to do fine on that. What I mean by upside, so here's what they're doing. They're selling a put, and here's their profit and loss graph on the sold put. And I put this in yesterday, but they're selling a put in TSLL, which is leveraged Tesla. Okay. Well, he said they were selling about 25% out of the money, and that's right. This was like 22% out of the money as of yesterday. When what Defiance does and what I like better is when they sell a little bit in the money. If you see this right here, right now that position's worth $150, $160. If the market goes up from where it is now, another 5 or 10%, the position goes from being worth $200 to worth $500. That goes through to the NAV in an ETF. It catches that upside related to the delta of the stock, the price change of the stock. That's why you put covered calls out of the money and you put puts deep in the money. A short put is like an inverse of a covered call. A deep in the money put, it's the same thing profit and loss wise as an out of the money covered call. But that's why people do that. So you can have a little bit of NAV growth potential. Okay. If you do it like they're doing it, it doesn't matter. You're locked in. You're going to make as much as you're going to make. It doesn't matter. You aren't going to make any extra by Tesla going up. If Tesla goes up 1,000,000%, you made $166 when you do this strategy. They make their alpha, their money, their return, their whatever. They get their upside. There's upside in the investment. They just don't get the upside from the stock's movement. It's an important distinction. But anyway, there's no one right way to do it. I stayed up till like 3 o'clock in the morning last night running back test. And there's advantages to selling out of the money puts also. Yes, you sacrifice NAV upside, but you have a higher batting average. Everything's a trade-off. So, but that's what I was talking about when I was talking about upside. And then I got a freaking comment. Yeah, I don't even want to talk about it. But I got a comment about a video I did on XPay, and I said XPay is going to decay because XPay, they don't even sell options. They don't even pretend they want to give you upside. They just sell part of your investment and give it back to you in a tax efficient manner. I mean, that's when I say it's going to decay, I mean, if the market's down, they're going to pay 20%. So if the market is down 20% and they pay 20%, XPay is going to be down 40%. Okay. Whereas triple QY won't be down that much because they've been selling options the whole way down. And yeah, they're going to be down also. They might be down 30%, but they're going to be down or 20%. They're going to be down less by virtue of the options they sold. XPay, is a wonderful thing. If you're very sensitive about taxes, they just literally give your own money back in a tax efficient manner. That's great. And also, if the market, as long as the market's going up, they can keep giving your money back and you can get it in a tax efficient manner and the thing won't decay and XPay won't decay. If the market keeps going up, the market goes up 20% every year for the rest of my life. Yeah, a person could have XK and they would have no decay. Okay, because the fund's just turning the 20% going up they just give it to you. So they're just giving you all the upside. So the NAV will go pretty much straight sideways. So it's not like XPay doesn't have a purpose. It's just not a purpose in my portfolio. But I received kind of an uncharitable comment about it, just saying that I didn't understand how XPay works. I don't think they understand how options work. I'm obsessed with selling options. XPay is like, to me, XPay is like giving up. Is like screw it. I don't even want to gamble on the market. Just give me my own damn money back. I mean, like I always say, one of the most important things for investing in high yield funds, the most important things, you have to understand what you're doing. That's for any investment. You have to understand why you're doing it, how it works, all that kind of stuff. So, and a lot of people just have no idea. So XPay is a great fund for those kind of people. If they don't want to mess with options, they don't want to think about time premium. They don't want to, but for people that understand that there's a force in the market that the volatility, and there's it's like at Hoover Dam. They can generate power. Well, the market can generate power too. When you sell options, you can generate. The market has offputs it has a byproduct that it offputs that professionals can monetize. That's what selling options is. It can create a string of income from that byproduct. All right. People that use XPay or the XPay strategies is just like, well, that's fine. We aren't going to trade. We're just going to give your money back. I mean, I guess it could work. All right. So what else should we talk about? Let's see. I made something else here. All right. I made a 5E verse. So this is just the value of all the 5E positions. Now, 5E is the Dorsey Wright fund that owns the high yield funds from YieldMax. And at the same time, it also owns the corresponding stock. So for instance, it owns FIBI, which is the high yield fund based on Facebook. And then it owns Meta stock. At the first of the month, it's 60-40, 60% FIBI, 40% Meta. But then, and it's supposed to be 20% of all of these, or if you take Fibby and Meta as a position, that's one position. Then you have Mr. and Misty, that's one position. Netflix, Infly, that's one position. NVIDIA, one position. Tesla, one position. Each one of those pairs is supposed to be worth 20%. The pairs are equal weighted, but within the pair, they have 60% of the yield max and then 40% just of the regular fund. This should definitely help with upside. I didn't buy this one in the family account because we're just going for as much yield as possible. My family already has enough growth stocks and stuff. This is great for somebody that doesn't have enough growth stocks but still wants to get in the yield game. They could get 5E, and then you have some exposure to growth stocks also. But FEAT is just pure exposure to volatility and pure exposure to income. That's what they're trying to get. All right, guys, so let's see what else we're going to look at, if anything. I've been tracking how his TSYY position's doing. Of course, it's up today, but everything's up today. I mean, or a lot of stuff's up today. I showed you guys how to do put ratio back spreads in case the market crashed, which it didn't. It could have yesterday, but so far it hasn't. I just love these kinds of trades. This doesn't expire until the 27th of December. Right now, the market's right in the middle of the valley of death. And this right now, this trade's about even. But this trade is designed to take off a couple of days before, probably Christmas Eve. If it's in the valley of death at that point, it's a $300 loss. But if the market goes a lot lower between now and Christmas Eve, we're covered. If the market goes a lot higher between now and Christmas Eve, which it might also, the trade ends up not costing us any money. We might we did it for $106 credit. The market goes up 5% between now and Christmas Eve. We'll just take this off for the credit. Take it off for a $50 credit. Basically, it's free insurance is what I'm trying to get at with these put ratio back spreads. We'll have more content on it. We'll have some more content on it. All right, guys. Well, for now, I'm going to let you guys get out of here. Let's see if the market's still bouncing. Yeah, it is for right now. It is. Check out the Qs. Now the Qs, they have a higher gap than the S&P has, and they tested that perfect this morning. The Qs are stronger than the S&P since the election, because all the tech bros got in on the Trump side of it. So they took off. Nasdaq is took off, but the Nasdaq gap from election night has been tested once, a couple of Fridays ago. But I guess to be fair, we had this open gap as well, which failed. That's why it stops right there. Or it was filled. So now once we get under this gap, right, we look for the next gap. If we got under this gap, we would look for this gap. If this gap holds by the end of the day and we start going up, then, by next week, or like a situation like this, if it holds for a couple of days or at least a day, then we're probably looking for higher prices on into the end of the year. Anyway, so that's NASDAQ, and here is Russell. Gaps aren't the only thing to look at, but it's one of the things you can look at. I also look at just the momentum off the Bollinger Bands, even forgetting about the gap when it closes 2 periods outside the Bollinger Band, go in that direction. Look right here, it closed the second period outside the Bollinger Band, giving you a sell signal. And even though the market was already down a bunch, it was a great sell signal, wasn't it? That was last Thursday. And then here we open Monday, Tuesday, and then Wednesday, the bottom drops out of it. So I look at Bollinger Bands, momentum, and then gaps. Where are there open gaps? Now, here's the bad scenario. This is the election night gap as well, and this is in the Russell. Well, it has been filled and it is failing right now. So they've got underneath it. And if it comes up and approaches from underneath, if you're a Russell trader, probably Russell traders that are looking at this same time frame, if it gets up here, might try a short. This is a place that you might try a short for a dead cat bounce. I'm just saying. So we have kind of the Tele2 markets, the Tele3 markets. The Russell's the weakest because it's given up its election night gap. The SPY or the S&P is middle weakest because it's got into its election gap a couple of times, and so far the gap is held. Okay, and then the Qs or the NASDAQ is the strongest. Having some problems with my subject verb agreement lately. And it's the strongest on a relative basis. All right, guys. Well, I appreciate you for being here. I appreciate you guys for watching all my videos this week. I haven't had a whole lot of them. Go watch my video with Mike Venuto. In fact, I'm going to go right now and I'm going to cut highlights of that video. That video was so good. There's a lot of information there. A lot of people don't realize who Mike is or what a heavy hitter he is. He is the definition of a heavy hitter. I mean, that guy hits. I mean, he hits for distance. I mean, he's a heavy hitter. Anyway, he knows a lot. I'm like I say, I'm gonna cut his video down into some highlights and then put it with some new content. Anyway, if you haven't seen the Mike Venuto video, go watch it. But also, I had a nice video and a nice talk with Will Ryan from Granite Shares. Go watch that as well. All right, guys. Well, I appreciate you all for being here, and you have a good day. All right, I'll see you later. Hey, I'm thinking about doing a live stream today at 3. Be there.